Hello and welcome to the class. I Dr. Meenu Balian would be taking your lecture today and I will be covering the cash flow statements, and today in this lecture we would be talking about the preparation of the cash flow statement. For this we need to first understand that what is the format of cash flow statement. See, this is the indirect method. There are two methods, one is the direct and other one is indirect method. In the direct method, what we do in journal, that we consider all the payments and all the receipt and we subtract it and we will find out the profit only. But when we are talking about the indirect method, the very first thing we are doing here, that we are taking the cash from the operating activities. In this we are taking the net profit before taxation and extraordinary items. So, the adjustment is being given, the adjustment for non cash and non operating item is being given. What will we do in the operating activities? We will add items need to be added is your depreciation, we will be adding interest on borrowing and debentures, loss on sale of fixed asset, means once you were selling the asset there was a loss. Suppose the costing of the machinery was 10,000 rupees and you sold it on 8,000 rupees, it was a loss for 2,000 rupees. It was supposed to be sold on 10,000 rupees or 11,000 rupees, but you have faced a loss. That loss will be taken care here. Increase in provision for doubtful debt. In case, what are the doubtful debts? Means the people who have taken the money and you having a doubt about that whether the people will give it back to you or not, the doubt is being there. So, we are making the provision for this also. If there is any increase in the provision, means last time it was 10,000 suppose, and if there is any increase, if it is 20,000 now, that it has been increased from the last year. For preparing the cash flow statement, we are taking the 2 years balance sheet and P&L account, and by this way we are actually checking that how cash flow is being done, how the cash is flowing. These are the items which you need to add, all these things will be added. Now, what are the different items which we need to subtract or deduct? These are like interest income, dividend income, rental income and profit gain on sale of fixed asset. If you were selling any asset, it was costing rupees 10,000 and you have sold it in 15,000, that means you have a profit of rupees 5,000. That profit amount will be here and all these things will be subtracted from this amount. The amount, the net profit before taxation is being written here and the added value will be written here and the subtracted value will be there. Why this bracket? These are the value which need to be subtract. For subtraction we are marking the, rather than putting minus, we are keeping this thing into the bracket. So, the amount which will come out here, that will be kept here only, and it will known as the operating profit before working capital changes. The head for this will be operating profit before working capital change. Working capital means what? Working capital actually is it is equals to the current assets minus current liabilities. The actually current working capital is what? By which you are actually the money which you required for day to day operation, that is known as the working capital. So, what we are doing here, if see carefully that I have put it here plus decrease in current assets. If assets are decreasing, for example, if we are taking like cash, not cash, we are taking debtors. If debtors last year in 2019 and we are taking for 2020, suppose it was rupees 5,000 and now it is being increased like 7,000. The 2,000 rupees has been increased. Now, we will see if there is increase in current asset, if there is any increase then we will minus. If there is any decrease, suppose apart from the debtor we having the stock. Suppose stock was rupees in 2019 it was rupees 3,000 and in 2020 it has been left 2,000. So, this amount is being 1,000 is what? It is decreasing. So, we will consider it into the decrease in current asset. I just repeat it again, the current assets, if current assets are decreasing, you are supposed to add the amount. and if there is any increase in current liability. If current liability is increasing, suppose creditor was 10,000 last year and this year it is 20,000, then what will you do? You add this amount here. If there is any increase in current asset and decrease in current liabilities, so you will subtract it. I just repeat once again, because these things need to be understood very well. The things which are increasing, current liabilities increasing and current assets are decreasing, that you are supposed to add. Where you will add it? You will add it into the operating profit before capital, working capital. And if there is any increase in current assets and decrease in current liability, now then you will subtract this thing. The amount which will be coming out here, this amount will be known as the cash generated from the operating, or from the operations, means by the operating activities. Now what will we do? We will subtract the income tax paid, net or tax refunded received. Here it will be here cash flow before extraordinary items, it will be plus minus extraordinary items here. The amount which will be coming out, that will be known as the net cash from operating activities. It will be known as the net cash from the operating activities. That is the first part. This is all about this operating activities. What are the different operating activities? Means for running up your business, for preparing, for doing any manufacturing, whatever those expenses are there, you are supposed to consider this into the operating activities. So, moving further, we will calculate the investing activities. I told you investing activities are those activities, means where you are, maybe you are purchasing the fixed asset, or maybe you are purchasing, maybe you are actually investing your money. So, proceeds from the sale of fixed asset. If you are selling your assets, proceeds from the sale of the investment other than the marketable securities, and proceeds from the sale of intangible assets. Interest and dividend received, non-financial companies only, rent income, purchase of assets, purchase of investment. See, the things which by which the money is coming, that is inflow. So, by the sale, by these you will be getting positive amount, inflow is there. Okay. And by this, these two, purchase of fixed asset and purchase of investment, this it is your outflow, and this will be considered like, will be minus it will be like your investing activities. The purchase of intangible asset, if is there, that will also be cash outflow, because you are purchasing here, you are purchasing the goodwill, intangible asset. Now, will plus minus extraordinary item, is there anything? The money which is coming out, it will be written here and it will be known as the net cash from the investing activities. So, we have covered two activities, one is the operating activities and other one is the this financing activity. Now, investing activity, not the financing. Now, the only thing is left is the financing activity. We will start with the financing activity. I told you financing means the composition, for making the composition of your capital, what you are doing. Maybe you are raising the money from the loan, maybe you are raising the money through the equity share or debentures or preference share. So, we will proceed. What things will add here? Proceed from the issue of shares and debentures, proceed from the long term borrowings, that is your inflow. It is also your inflow. Increase and decrease in the bank overdraft, final dividend paid, this is your outflow. Interim dividend paid, again it is outflow. Interest on debentures and loans paid, again it is a payment, it means outflow. Repayment of loans, again it is outflow. Redemption of debentures and preference share, it is again outflow. Share issue expenses, it is also outflow. These are the expenses which is being arised at the time of issuing the shares. Any extraordinary item, plus minus whatever it is there, we will write it here. So, these are your outflow, means it would be subtracted, and this is your inflow, it would be added. So, the amount which come out will be written here, and by adding all this will come out here, and it will be net increase or decrease in the cash and cash equivalent by adding 1, 2 and 3. What are these things? One is from the net cash received from operating activities by received by the investing activities and received by the financing activities. So, by the cash which we have received by these 3 activities, we sum up here and will put the total here. Now, what will we do in the 5th part, cash and cash equivalent at the beginning of the year? There would be a balance at the beginning of the year, means for the 2 years balance sheet we are taking. In the previous year, what is the opening balance and what is the closing balance? For the same, what is the opening and the closing balance? It may be written in the format of like cash in hand, cash at bank, short term deposit and marketable security. We write it here only, and cash, what will we do? We will add this here, the total which will be coming out, it will write this, add this here, and the total will be written here. Now, the cash hand, cash at bank, short term marketable deposit and marketable securities at the end of the year, it will be automatically comes out of, because while adding it here, once you will writing here the balance which comes out, that will be your closing balance, and it would be a checking of the questions also. So, moving for the component of the cash flow statement for making it more easy, for the operation activity, cash received from the sale of goods and services minus cash paid for operating goods and services. Once we will do the question, you need to summarize these 3 rules. Remember these 3 rules. The things cash received is your received from the goods and services minus whatever you have paid, and it will come out cash flow from operation. Similarly, for the investing activity, cash received from the sale of investment and long term assets minus cash paid for the purchase and long term investment, and the things which come out is the cash flow from the investing activities. Third one is cash received from the issue of debt or capital stock, cash paid for the dividend and to repay debt or to buy the treasury stocks, you will minus it, and the things which come out cash flow from the financing activity, and this would be your, the whole things is your cash inflows and this is your cash outflows, and the things which comes out is maybe the positive, it could be positive, it could be negative, in all the cases net change in the cash from the period. So, it is the component, it is how we are actually, this is just a preparation for preparing the cash flow statement. Now, we will do some more practical questions to understand it better, because theoretical part is okay, but you can understand this thing betterly with the numerical. So, here I have written some points A, B, C and so on. What is the question? Identify the following transaction as belongs to cash sale of goods. You think about it rather than seeing the answer. This is once you are selling the commodities, it is your operating activities. Actually, what we are doing, this is what we are manufacturing and then we are selling the goods. Once the goods are being sold, it is known as the operating activities. Cash received from the revenue from the service rendered, it is also the services which you have given. Maybe you are dealing in the service, maybe you are dealing in the goods. If you are providing or if you are manufacturing goods and you are providing the services, whatever cash you are receiving, it will be your operating activities. Cash purchase of goods, it will again in the operating activity, but it is your outflow. Cash paid against the services taken, again it is outflow, operating activity. Patents purchased, it is your investing activity, because what you are doing, you are purchasing the intangible assets. In the previous thing I have told you that what is the intangible means, once you are purchasing the goodwill, patent, trademark, it will be your investing activity. Marketable securities, cash or cash equivalents, these will be understood as the cash and cash equivalent. Bank overdraft is your financing activity. Moving further, there are more examples. proceed from the issue of debentures. Once there is a talking about the shares, debentures and capital, it will come to the financing activity. Purchase, if you have purchased any share, means it is a kind of investment for you. You are talking about the investment. Repayment of long term loan is your financing activity. Commission received is operating activities. Redemption of the debentures is again financing activity. Interest on debentures, your financing activity. Interest on investment is your investing activity. If you have paid tax, or it is once you are paying the tax, income tax, it is your operating activity, because the income which you have generated through the manufacturing, that will consider into the operating expense activities. Income tax paid on the gain of sale of asset, it will be considered as investing activity. Cash received from the debtors will be understand as the operating activities, and the cash paid to the creditor will be considered as the operating activities, because these debtors and creditors are arise at the time of the operation, at the time of the selling and purchasing of the commodity. So, similar kind of question you can do from your textbook also. There are many more examples. Now, we will go for the illustration part, means some calculation kind of thing. The question is being given here that from the following information calculate the cash flow statement from investing activity. One by one we will consider everything. Investing activity, see the question is being given. This is the balance sheet, balances from the 2019 and it is from the 2018. Machinery at cost rupees 5,50,000 and it was 5 lakh only. So, the difference is 50,000. Maybe the purchase is being done. Accumulated depreciation has been given, it was earlier 1 lakh or now it is 1,70,000. Adjustment is also being given during the year. A machinery costing rupees 50,000, accumulated depreciation provide thereon 20,000 was sold on 26,000. It is all about the question. Now, we will do the solution. Before going in detail, need to prepare some some accounts, because machinery is mentioned there, depreciation is also mentioned there, and for this you need to prepare the machinery account. See the machinery account, the balances which we having, it was 5 lakh and 5,50,000. It was in 2019 and it was a balance of 2018. So, and the other thing is like accumulated depreciation has been given. See in this question that accumulated depreciation has been provided like 20,000. So, we have written here 20,000 accumulated depreciation, and the sale was made, it is mentioned here that machinery was sold on 26,000. So, we have written it here only. Now, we will check that whether we are in profit or loss. For this we will prepare the this accumulated depreciation account. What we have done here, the machinery was balance for this is was given like accumulated depreciation 1 lakh and 1,70,000. It was for 2019 and it was for 2018. So, the machinery costing rupees 20,000, from where this amount has come, you can check it here. The 20,000 of depreciation was provided. So, we will write it here 20,000 for the machinery account. We will add this, it is 1 lakh coming out 1,90,000. The balancing figure is 90,000. So, going back, the sale is being 26,000, profit and loss account, loss on sale. See this thing, the 4,000 was the loss at the time of selling the asset. So, it is the balancing figure, this is the balancing figure. We will put this into the statement, that is our cash flow from investing activity. Purchase of machinery was this, from where we have taken this amount, it is from the balancing figure 1 lakh, because amount has been purchased, how much machinery has been purchased, how much costing, it was 1 lakh. So, we have written here the sale of machinery is being, it is being given in the question itself, it is being mentioned here that 26,000 rupees was sold. We will write it here. and the amount which comes out is that is in the minus. Net cash used in the investing activities, it is in the minus. So, moving to the next question. From the following particular, calculate the cash flow from the investing activity. These things are given. Machinery, it is purchased, it is sale. Purchase was 6,20,000 and sale was 2 lakh. Investment was purchased 2,40,000 and it was sold in 80,000. Goodwill was rupees 1 lakh and patent was rupees sold in 1,50,000. There are some additional information also being given. We need to understand this thing also. Interest received from the debenture held on the investing is 8,000 rupees. Interest received from 2,000 rupees. As we know, all these are from part of the investing activity. Dividend received from share held on investment 20,000, dividend payment for share capital 30,000. A plot of land was purchased out of the surplus funds from the investment purposes and was let out for the commercial use. Rent received out of this is 50,000 rupees was this. So, we will solve the question immediately. This is cash flow from investing activity. Okay. So, purchase of share was, why the purchase, why we are writing purchase in the minus in the bracket, because by the purchase cash is actually outflowing. Purchase was made of 6,20,000, purchase of investment was 2,40,000 and purchase of goodwill was 1 lakh. It is immediately we have taken from this, fine. And sale of machinery was 2 lakh, rent received was 50,000. This is being mentioned here that rent was received 50,000. We have written it here. Dividend received 20,000, it is being given here that dividend has been received 20,000. Interest is also being paid. So, sale of investment was there, interest on debenture was 8,000 and sale of patent was 1,50,000. 1,50,000 was from this. We have transferred all the information. Now, we will add it the minus, it will be like minus amount and it is known as the net cash used in the investing activities. Means rather than more inflow, it was the more outflowing was there. Moving to the next question. From the following information, calculate the cash flow from the financing activities. See, the long term loan is being given for 2 years, that is 2 lakh and 2,50,000 for 2018 and 2019 respectively. During the year, the company repaid a loan of rupees 1 lakh. Do it here only. Cash flow from the financing activities is being given, like loan repayment was 1 lakh rupees. It is the repayment, we will transfer it here only, and the new loan raised from 1,50,000. Okay. So, the amount which comes out is 50,000. The 50,000, it has been raised by 50,000, long term loan has been raised. So, the total is coming 50,000 is your amount, that is your cash flow from the financing activities. Why, how this actually 1 lakh rupees and has come? What we have considered that balance from the beginning was rupees 2 lakh and at the end it was 250 lakh. Repayment of the loan was done for 1 lakh rupees. It is coming out 3,50,000. Once we subtracted 2 lakh from this side, it will come 1,50,000. So, the amount which we have written here, that new loan raised was coming from that. I just repeat this question again. See, in this though two information has been given that during the year loan has been repaid for 1 lakh rupees and long term loan was 2 lakh and 250. So, for this purpose, because two balances are being given here and one additional repayment is being there. So, we have prepared this account and what we have done, this is the balance at the beginning and this is the balance at the end of, what is from where we have taken this balance, this is the balance at the beginning and at the end. So, this is the beginning balance, this is the ending balance and the repayment of the loan was done at the time during the year was 1 lakh rupees. The amount, once we total it, once we sum up it, it will come out 1,50,000 amount balancing figure, and it will go to this place new loan raised, and the amount which come out from the financing activity is the 50,000. Moving to the next question, next illustration. In this we are supposed to calculate the investing and financing activity all together. The question is being talking about machinery at cost was 50,000, 40,000, accumulated depreciation was 12,000, 10,000, capital was 35,000, 30,000, bank loan was 10,000, or in 2019 there is no bank loan. During the year, a machine costing rupees 10,000 was sold at a loss of rupees 2,000. Depreciation on machinery charge during the year is 6,000. Let us solve this question. For solving this, need to prepare first the machinery account and accumulated depreciation account. So, balance which is being given for the depreciation is, for the machinery costing rupees 50,000 and 40,000 will be considered for preparing the machinery account, and accumulated depreciation balances will be used at the time of making the accumulated depreciation account. First we make the machinery account. So, accumulated depreciation was, let us start with this balance 40,000 and the balance is 50,000. It is being taken from the question from the balances. Okay. Now, we will talk about the adjustment is being given that during the year machinery costing rupees 10,000 was sold at a loss of 2,000 rupees. This loss will be transferred to the machinery account. Depreciation of machinery charge during the year was amount for 6,000. So, what we have done, the loss which has been arised was the 2,000 rupees, and say let us check with the accumulated depreciation account. This is the balance at the beginning, this is the balance and this is the balance. 10,000 and the 12,000 is the balance from, it is in the beginning 2018, it is in 2019, and the depreciation which has been charged during the year was 6,000 rupees. By sum up it 16,000 is there, minus by the subtracting 4,000 amount will come, it is means the balancing figure. It is a balancing figure, it will transfer to the machinery account, and we have written it here that sale is being done. By adding all these 4, 4, 8, 8 plus 2 is 10 and this 50 is the 60. 60,000 minus 40,000 will come to the 20,000. It is a balancing figure. And it will transfer to the this. Now, we will prepare the cash flow from the investing activity. We have made a purchase of rupees 20,000, it comes from this, and sale of machinery was done 4,000, we have drawn it from this side. Okay. The net cash from investing activity will be 20,000, it is a minus term, 20,000, 4,000, it will come out 16,000 of the minus. Cash from the financing activity, proceed for the issue of equity share, repayment of the bank loan. See here only, capital was 35,000 and 30,000, bank loan was 10,000, 5,000 has been increased, capital has been increased 5,000. See this amount, the difference between 30,000 and equals to 5,000 means last year it was 30,000, this year it is 29, in 2019 it is 35,000, means share has been issued. In the bank loan earlier it was 10,000, now there is no loan. So, it will be any means repayment has been done. By making the payment, it is the outflow and it is your inflow. So, it will coming out that net cash from the financing activity will come out minus 5,000. Okay. This is all about the cash from the financing activity and cash from the operating financing and investing activity. I just repeat once again that once you are making considering the cash flow statement, there are three activities: cash flow, where we are considering cash flow from the operating activities. In operating activities, we consider all the expenses, all the incomes, all the current assets and liabilities, current liabilities which has been helping you out at the time of once you are preparing the once you are checking that cash inflows is there, cash outflows is there, it is considered in the operating activities. Second one is once you are talking about the cash flow from the financing activity. In the financing activities, financing means from where you are raising the fund. Maybe you are raising the fund through by issuing the debentures, by issuing the shares, and it once you are raising money, once you are raising the money means it is a inflow. Once you are raising money, you are issuing the debentures and shares, it is coming into the business. Once you are paying it back means once you are making the payment, the amount is going out of your business. And in investing activity, what investment, long term investment you are making, you are selling the fixed, you are purchasing the fixed assets. This is all in the investing activity. For more knowing more in the detail, you can actually go through with these books, S.N. Maheshwari book, the Major Narayan Swamy and Amrish Gupta's book. Do more practice for this kind of question. Do first time do the single activities calculation, then we will move to the in other session we will discuss about the detailed question. With this, thank you so much.